Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on the 30th of November, 2023, end of a month. Tomorrow's the end of a trading week, and very shortly, the end of my Cyber Week sale. It's coming right to an end. So if you're interested, I'll show you that in a minute as we go into the video, but a lot of you are taking advantage of it. Great move. Remember, in that, you can give the course away, or you can keep the course and give the research away. It's a great Christmas gift, and we can start things when you want. So it's very easy on those courses. You don't have to start them right away. You wait, and we wait for you to tell us, hey, this is a good time for me. Well, there's an awful lot going on. Let's start with OPEC. In OPEC, what they came up with is they held the meeting, and then they decided to go on the old I trust you system. That won't work. That's a bunch of nonsense. Don't you dare buy into the idea that on a voluntary basis, they're going to get these other countries other than Russia to really follow their lead. Here's my word to that: nonsense. Angola gave the meeting 2 hours to end, and it immediately said, not us. Brazil wants to join into OPEC, so they said, yeah, we'd like to consider that, but they're not members yet, so they're not bound by anything. You know, the Congo and Nigeria, they're fighting this tooth and nail. They don't want to give up anything. And Russia, the liar, that's what I'd like to call them. Russia, the liar is a good name, not the czars of Russia. Russia, the liar. Mr. Novak comes out and immediately says, okay, yeah, we're going to go to 500,000 barrel a day cut come January. Tell me a 2-month period where they haven't cheated. They keep getting caught. The Saudis keep going after them. The seaborne numbers bear out what's going on. So you get that. However, they have, for the mainstay, held the line. So I give them credit on that, but they will pop in that, and they need the money for the war. I'm not convinced they're that inclined to keep going and saying, yeah, this is the perfect time for us to reduce our biggest income. Wheat prices have been coming up a little because they're hampering also the wheat shipments out of Ukraine. Ukraine for a while was saying and trying to show everybody, these routes we've developed along the coastlines of friendly countries is working. Well, it isn't completely working because a lot of their grain is landlocked still. And you see that in the wheat price. People are starting to talk about it now. All right. So on the stock market, did you see the Tesla truck? It did come out, and I was watching on internet as a bunch of lucky people that bought the truck. I took delivery of them. None of them had the wrappers on them. You know, they charge for the wrappers a certain amount of money. You can get your truck, and then they give 9 designs that you can get the truck wrapped in. It cost about $4,000, as I understand it, to wrap a truck, and I think they charge $8,000. And then they have another feature they charge for. So these trucks go from, we're all wondering about the pricing. I think it's $49,000 and $96,000, but it's a heck of a truck. I mean, it raced a Porsche 911. I don't know which version of the 911, but it beat it. And by the way, it was towing a Porsche, or it had it in its bed. I mean, it was funny as can be, but this thing's a monster. We can't wait to see him on the road. And I certainly hope, I love this guy. I want him to be very successful. All right, so as we take a look at how the market is up on the E-mini S&P for the week, it's up nothing, 0.11%. It's a quiet week so far. I feel like it's advanced dramatically, but it really hasn't. You can't get away from the facts. You're up 1/10. That's not a big rally. When we take a look at the market, I go, oh, here's why. Now, I have had my clients long these markets off of seasonals, and I've got them in, and I'm telling them, I did it this morning. I said, you might want to consider cutting down the position a bit because I think you're going to have to consolidate. What do you think the market is doing right here? If you had to guess the word. I hate to say it, we're consolidating, and that's where you're at. You can see the pattern is still bullish. You still have higher lows and higher highs in the market. Your overall, the key averages, you can afford to slip back a bit, but you're not going to go to the moon right now. It doesn't make sense. You've had this phenomenal rally from just over the 4,100 level up here. I pointed out to you an inverted head and shoulder formation that might have gotten up ultimately towards 4,700. It doesn't have to. You've made a heck of a run. That's my point. There's nothing bearish. Don't get me thinking that I'm bearish, but I do think the market needs to breathe and consolidate what makes up the S&P 500. Your Bollinger Band, if it wants to rally, and boy, I wish it would because of what I'm talking to my clients about. Well, up here, and when I say clients, it's a mixture of futures traders, subscribers to my information. Now, you can see that you still have the embedded reading. So as long as that stays bullish, I'm not too worried. I can go through the consolidation, or the market can, might be the right grammar. And until the red line closes under 79, it still favors that if there's a surprise, it's to the upside, not the downside. In the NASDAQ, this is not the case, and this is why I'm getting nervous, and that's why I've said it to you. You can see you've lost the bullish reading. You're under 79 in the slow stochastic. The odds favor that before it gets up here and makes the higher high, it's going to come back and challenge the red line, the 18-day average of closes. The Dow is the powerhouse today, and as it was coming up, if you were sitting next to me, you'd have had this elbow right in the side going, why aren't you hitting the sell button on your computer and taking money off the table if you're long? All the seasonals have been up in the Dow, the NASDAQ, and the E-mini S&P, well, the S&P 500. It's time to grab some money is all that I'm saying. No, I do not think we're going to keep going to infinity. The market that's the weakest has been the Russell. One of the numbers tonight is over 80. They both got to be for days on end, which takes me into the charting courses that you can get for free during Cyber Week. Remember, I promised that I'd hold this through the week. You can get my charting course, and please do me a favor. Don't activate the full course right now. Give me the benefit of giving you the full new course that I'm doing. If it's not ready for Christmas, it'll be ready in early January. You will like it, all right? It's way better than the original, but if you're determined, you're not going to get both for free. Your call. The Enhanced Bollinger Band course, that is perfect, ready to go. So if you don't need the full charting course, this is completely separate. I do not teach in the full course what I do in the Enhanced Bollinger Band course. And outside days, you see them all the time. I crack up at people that don't know how to work with them. It's one of the easiest patterns right in front of you, and it's a continuation or an end of a move pattern, often. And there's a way to say, nah, that's a fake out. Basis the action. I'm not going to give you all the secrets. How do you get it? This stuff is all free if you buy any 1-year subscription to my research. It could be my full research, which we call my twice daily written updates and my morning futures. It could be a combo where you get the futures and the Spider ETF videos. It can be, if you're not a subscriber, just my futures video or just my ETF video. And if you're already a subscriber, if you upgrade, you can't go sideways from saying, well, I'm going to cancel the futures subscription and go to the ETF. You can add one or the other, but you can't cancel one to get the other because they're similarly priced. So that I'm not going to be out this money. This is not free for me to give away to you. The course includes charting software. I make sure you get access to my full research, no matter what you've got during the time that you're taking it. And I think you'll find it well worthwhile. Now, here's the beauty. You can give this away as a gift. You can decide to give the subscription. We have people that do that to the research elsewhere. They keep the courses, or they want to be the subscriber to all that I'm doing, and they give away the courses. We'll work with you in any way that you want to do it. It's really simple. How to get this? There's a cursor up here. If you move your mouse there, you'll see it. You can go to iraepstein.com. You can call my staff at 866-973-2077. And after everything's done, you'll get an email and you can just let us know at any point, hey, how do I start my course? Bingo. Get it done for you right away. Charting software, more research, and the courses are cool. If you like what I do here, I think you'll like the way I teach. Okay. So let's go back, if we could, right now to the chart action. So as I said, on the Russell, our problem is so many traders are trying to buy this because they are convinced that if the other indices are good, this one's going to come alive. I agree with the thought. But as a chartist, it isn't there yet. That's all. Not disagreeing. If it comes alive, the logical area it goes is 1841, 1847, the combination of the green line, the 100-day average, and the 200 in gray. In the 10-year note, you got up to the Bollinger Band. What are the odds of staying over that band or under it? 5% of the time. Why don't people understand the natural resistance and support area in the market? Because of greed. It's going. It's down. It's going to keep going. This baby ain't stopping. Oh, it's going to the moon. This is it. We're going to take interest rates down dramatically. No, you're not. No, you're not at all. You still got to convince the Fed, who is not going to go with your story, that they have to move and move quick. They're not going to go that way. They're going to fight tooth and nail all the way through because their goal is mandated to get inflation back down. Now, they've decided 2% is the number. I still don't think we're going back to 2%, not anytime soon. I would be shocked if it's 2024. How's that? But I do see inflation falling across the world. But I think the last part of it, just like a sprinter on a track, the last part of it is the hardest part, and we're in it. You went from 9% to headline 3 for all purposes already. You think it's easy to take it down the rest of the way? Congratulations, I don't. By the way, the good news, I don't know if you saw what went up in a wage, the labor, that's going up. 0.1% in the last report. It's nothing. By the way, today I sent all those reports out to my full research people. So they had it in the newsletter. All right. So as we take a look at the 5-year note, the pattern has not been a trend. The pattern has been a lower low, higher high that certainly has worked with an upside bias. If you can define bias in a market, you've beat half the game. And I teach that in my full charting course. When you're over the 18-day average, in unison, what's my bias? You got it. When you're under it, what's the bias? Pretty easy. So it's a filter. So if I'm getting buy signals that are below the market, no, that's short covering. That's not telling me to go long. It's one thing to cover a short position. It's a very different thing to go long. This market, for example, in the dollar, you're coming up. If you lose the embedded reading by this number closing over 21, then I think you can't be short. Until that occurs, now you got your fingers crossed if you've overstayed your hand. Again, I thought the support would come in at the 200-day average, and we'll see what it can do from there. The next nosedive can carry the market lower, but will there be a next nosedive right now? That's the big question. And if the dollar's coming up, the euro's going to weaken. So you're back right here. Now, I thought originally this was the resistance zone, and it certainly went much further than I thought it would. Be careful, you're losing that embedded reading, but you're already at the first objective on the downside, the 200-day average. The next one's about 108.63. This is good news. Why? Because I don't think this is the year coming up of the dollar bull. I think this is the year of the dollar bear coming at you, and you want to get pullbacks in these other markets, I think, to be able to play. In the British pound, every part of me is going today, oh, buy this break, Ira, buy the break. And then I'm looking and going, if you lose the embedded reading, you're probably going back into this 125 zone. That's 130 points, $700 lower. I said, I can afford the wait. Everything's coming together right there. I know where the support is. Be patient, Ira. And then I looked at the December Bitcoin. Well, we know what this is. This market is counting on by January 10th, the SEC will have to, by law, give an ETF based on spot. Could they find ways to delay it? Yes. Can they find a way to stop it? Unless they can find a court to overturn the recent ruling on grayscale, I don't see it. I'm not a practicing attorney, so I don't know. And even if you're a general attorney, you don't know. You got to be really versed in securities law in order to have an idea. There are ways to delay, and that's been going on. But I'm telling you, I looked it up. January 10th is a big drop date. When we look at Brent versus WTI, and now I'm at the February contracts. I didn't have them in yesterday. You're giving a little correction here. That's okay. It's still, Brent is stronger than WTI. As long as you stay over this number, it means the bias is up to the Brent. Now, when we look at the February Brent, don't you love what I teach you? I do. This is everything. I want to use the word everything. I'm looking at the combination of the 100-day average and the upper band. I have a market that coming in is overbought, any reading over 70. It's a market not trending. I'm looking at it, and I told you yesterday, I said, you couldn't get me in Brent for all the money in the world. I think this OPEC deal is as big as any FOMC meeting. I said it here. I'm staying with what I said. Here's today's action. You do realize that's a $5 move. You can break your account on a move like that. And where did it go? The Bollinger Band, the 100-day average, and bang, fell all the way back to the 200-day average. Stop. I mean, if this isn't what I show you here over and over and over, then I don't know what to tell you anymore. I don't know what you're listening to. Same thing going on in WTI, okay? This is not tradable. The market's caught in the Bollinger Bands. It's now got to digest what we were just told by OPEC, and the traders got to decide, do they believe it? I'm in the camp that doesn't believe OPEC. Higher low, higher high. No trade. This is the bear market. Keep saying it. Doesn't even give you a bounce. It's just a son of a gun bear market. They keep not drawing on the stocks we have because we don't get lasting cold weather. We're December 1st tomorrow. I'm 40 degrees in Chicago. You know, normally we're freezing. I did wake up the other morning, the 14, without a wind chill, one day. And immediately we're back in, and I looked at the 10-day forecast. We're in the 40s all the way through. So far, it's mild. It won't stay that way. Mother Nature will get it cold, but it's going to be every day that goes by is a shorter duration day. And with El Nino here, I don't think we're going to get a lot of the snow either. So we will see just how this all comes together. Interesting times, a lot of fun. Take advantage of the coursing. Remember, you can move your cursor to the top there. Take advantage of what we've got for you with a free course with any 1-year subscription. This is ending this weekend. Take advantage of it. I'm Ira. You take care.